Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Tuesday, the 18th of April, 2017, around 2:35 p.m. Central Daylight Time. All right, my friends, as you can see, mostly, not everything, but most of the grains lower. Beans well off the low. They got as low as $9.50, back up here to $9.56, but still down 7.5 cents. The wheat got itself a bid. Cotton, a 1-point correction, but it could be more than that in the making here, the fact that it's just sort of stalling out finally. Sugar market came to life, and maybe we're getting to the point where there's value in that particular market. Now, it helped a lot of markets today. It might have cushioned some of the blow with the dollar down 75 cents. Yeah, that's a huge break. Look at how large the rallies are in foreign currencies. This is more of the idea that there's still problems facing the U.S. with President Trump not getting much of his plans through. He's very good at the executive orders, but unfortunately he has not been able to get anything through Congress, and that's really going to be a sticking point here. He's doing a signing today of Build It in America and Hire American, which is great for us, but, and there is a but, it's got to be more than that, and so far just rescinding primarily of President Obama's executive orders, and the ones he's putting in place could end up rescinded down the road too. As we look at the chart of the May beans, even though we broke good today, we didn't get back down to that 929 3/4 level. However, you are in a clean-cut downtrend. On a closing basis, no, though. If you take a look, you've gone from 48.5 to 66.25. Now you're at 56.25. So you've got to get down under that 48.5 to stop that upthrust. A lot of talk in Chicago that we got $9 July beans, maybe $8.5 Nove coming, unless we get weather scenarios that can support these markets. In looking at a daily bar chart, you can see how the market came from this low, got a bit of a rally, and pulled back down. It's a formation that we've seen to a degree like we did back here. And it's a continuation formation, if anything, unless you get over a previous high, and that would be 972.5. Is there a trend now? Well, the swing line study, which is the brown line, says no. This is the chart without the swing line. This is it with it. And you've got a lower low and a higher high. So you don't have a repetitive pattern, one of a stepping ladder up or stairs on the way down. All the market did is, over the past 2 days, make an attempt to get to the 18-day average, and even today got to it and then fell apart from it. So that line in the sand theory, that the markets, when they're under the 18-day average, when they rally back off, and that's a resistance point, holding up at this point in time. Should the market decide to let go to the downside, we've got the lower Bollinger Band, which is this black line, that's the upper one, curling to the upside ever so slightly. That's your theoretical support in the market at this point in time. And in momentum, you got up high enough to clear the market out of being oversold. So we have downside bias. We don't have a trend in play and a market that has worked itself out of being oversold. When we come to the soybean meal, now you can say, looking back at it, that this rally did fail at its attempt to get up to the upper Bollinger Band. Prices are hanging here against the 18-day average of closes. Some could argue that if you took out today's high of 318.30, you could, as long as today's low's not penetrated again, have a pattern of higher lows, higher highs over the 18-day average. I couldn't argue with that. So that's a possibility. And in the soybean oil, the rally to the 18-day average ran out of steam yesterday, and it gave back literally everything. If you look back yesterday, let me just take you to that rally. Here you are. You're up 65 points. Today you're down 65 points. So it's one of those things where they just go up, knock the shorts out, come back. Is there a trend in this market? Flat out, no. You got a higher high, a lower low, and you're oversold. The bias is down, but that oversold makes it a hard market to trade. In the corn market, you slid back and so far haven't found the support at the 18-day average on its first challenge of it. It's close to it. Tomorrow it might come back, but momentum is pointing down. You do have a pattern of higher lows and higher highs. You've negated the upside momentum by closing under the 18-day average. Now if the market gets under 65.25, I'd be looking for the 60.75 area. In the wheat market, you made a run for the 432 low, could not take it out and closed higher. So what's the pattern we're left with? Well, you still have a lower low and a higher high. Like the other market I was just talking about, soybeans, if you take out today's high in wheat, you could end up with higher lows and a higher high. The key will be to close over 439, and there's no bias here. Well, there's bias to the downside, but no trend at work and momentum pointing down. I find it a confusing chart. In the sugar market, another attack of the 18-day average with an outside day up and momentum. Well, the market's been oversold, so you're in a corrective mode. I'm going to make an argument here that you got higher lows, higher highs. The resistance is pretty clear at the 18-day average of closes. Should you clear 1713 until you take out today's low again, you could argue you're going to that upper Bollinger Band. In the coffee market, the market probed and was able to get over the top band of the Bollinger Bands, and that's important. It is overbought. It's not trending because you got the lower low, higher high. If the market's a real fake out to the upside, you'll give this up and close right back in those bands tomorrow. We'll find out if that's going to be the case. Should it extend, the 100-day average at 148 is waiting for the market. In the cocoa market, you've now got what we call those embedded readings. It's where the slow stochastic momentum oscillator locks into a downtrend. You're there. So until the red line closes back over 20, I contend that rallies in this market will be selling opportunities and hit fairly hard by the bears. Get the red line over 20 on a close, then I think the market can make a run back to the 18-day average. Right now the bears control it. In the cotton market, momentum is still pointing higher. You've got higher lows, higher highs. Yeah, you made a higher high and closed a bit lower. I'd look for support towards that 18-day average of closes, and until you take out 76.06, I think the bulls have the upper hand. In the cattle market, all you're doing is pulling back to the other side of the Bollinger Band. It's a new high for this leg of the move. You're still in an uptrend, admittedly overbought, but there's room here for this market to correct, and that may be what it needs to do. Same condition in the feeder cattle. Bollinger Bands, you know what I'm going to tell you, they contain markets. You can run against them. That's easy. But staying over them successive amount of days gets to be difficult. You are still overbought here. And in the hog market, it looks like it wants to reach down, challenge that 70-50 area, but in a very oversold condition. So that's what I'm seeing in the marketplace. Here's a nice offering for you. 1 year free subscription to Modern Trader magazine. Yeah. Go out and get it online. You're going to pay $79.95. Get it from us. You're going to get it for free. This is what the May issues looks like, and it's the 50 FinTech leaders. These are the different articles, and as you can see, options, which stocks to buy, cycles, ETFs, FX trading, chart patterns, commitment of trade talk, tracking stocks, it's all there. And then when you get to some of these different oscillators, fascinating reading, patterns within the patterns. If you're a technician or somebody that doesn't like the technical and you want to read about the fundamentals, it's all here. Then they back it up daily with new stories from their staff of writers. You can get it by either calling us, going to our website, you'll see a carousel of free offers, or click right up here. If you're watching me on YouTube, the form will appear. Sign up for it. We'll get it in your hands. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.